Hello, traders. I welcome you all to this exciting episode. My name is Sunday again, and I'm a forex trader. For some years now, I've been trading. By His grace, I've been able to find my feet. When I say find my feet, I mean I can now come out and say, yes, I'm a trader. I'm not boasting about it. It's something that took me years to learn. All right. Getting the knowledge is one thing, the application of the knowledge is a different thing entirely. If you ask any trader, they will honestly tell you this. That is the gospel truth. For you to say that I am now a trader is not easy. You must have gone through horrible time. All right, up to a point where you can say you wanted to say I don't want to trade anymore, but with resilience and consistency, you keep on pushing. All right, spending time studying the charts and patterns, candlesticks. Then by so doing and by doing back testing, you will now be able to decode what you've been doing wrong. Today, being 26th of April 2025, the topic of today is the optimal timing for engaging with a trader. We all know that in trading, anytime Mr. A perform analysis and stick to a bias, maybe the person's analysis tells the Mr. A that he or she should go long. Then Mr. B will perform his own analysis and say, okay, I will go short. That means go bearish. Mr. A did the same analysis on the same chart with the same data. He or she decided he wants to sell. And in another hand, the other person performed the same analysis and decided he wants to buy. So that point where you click buy button, your broker, the job of your broker is to match you with somebody that says, I want to sell. Yes, that is how it works. It's not a magic. But it's not as if they will stand there and be monitoring. Your broker will stand there or sit there and say, okay, when somebody places a trade, I want to buy, then they will now start scouting for sellers. Then they will now match you. No, it does not work that way. There are applications designed that work automatically. All right. Once you click buy, there's somebody that clicks sell. Automatically, they will link you because once you hit profit target, you take that person's money. All right. You sell. All right. But once it goes stop loss, it hit your stop loss, the other person's buys because once you place a sell, as you are selling coming down, you buy low to sell high. All right, all right. You buy low to sell high. You sell high to buy low. That is what works in trading. So entry timing is the problem. Strategy is not the problem. Guys, listen to me. You can learn strategy just for a day. Let's say, for example, the strategy that I trade is what? I trade SMC strategy. Like when we are bullish, price pull down, it breaks structure. Pull down, retrace, break structure. SMC trader, what do I need to do? Because I'm telling you that you can learn strategy just for a day. It, price created a high, break structure to the upside, right? This is a pullback. This pullback now, if it breaks this, if it violates this leg, that means it's no longer going up. If it takes out this support leg, that means it's no longer going up. It's no longer bullish. So once he make a retracement and stop here, all right. Once you make a retracement and stop here, this point here will now be tagged as what? Order block, OB. Because there will be a candle here that will trigger buy, that will make price action to break this high. And once price action break this high, we say break of structure. All right. Now the origin that caused the break of structure, you just take that candle, or if there's a little consolidation, if the candles are equal, you just mark the place, wait for price. Now your point, what you will now do is for you to wait for price to come and tap you in before it start going up again. So you will now set a pending order, buy stop limit order. You will now set it here. But like this limit order you set here, you wait for price to come and interact with this order block again, because it's the origin that caused the break of structure. In future, price will still come back on its own to come and interact with this order block. And once price gets here, because it's another block, it broke structure, is the one that push this price up. Once we get here, price will react. Now, there's one thing we should understand. If price react and dish out a buy, all right? Once it gets here, there will be a reaction. There's no magic. There will be a reaction. It must dish out a buy, even if it's one candle, two candles. But in the long run, if the buyers are no more, if the sellers are more than the buyers as they are pushing the price down to this other block, there will just be a little reaction. It will now fail. The dish out, the buy will now fail, price will now turn and start coming down again. What do you need to do? You come down and wait for it in another order block again, until you get the one that will hold and push the price back to the upside. All right? It's a very simple thing. There is no magic. There is nothing you can do about it. If a level did not hold, it's absolutely beyond your control. There's nothing you can do. That is why we have stop loss. Because if you place your entry, the next thing you should do, you place your stop loss. Now, if the level did not hold, your stop loss will take care of the loss. All right? That is how it is. That is just a strategy. Okay, if you are trading support and resistance, for example, let's say you are trading support and resistance, for example. I don't want you guys to complicate trading as if you will be having analysis paralysis, you will be struggling with market. Why should you be struggling with market? You don't have control over the market. We are speculators. All you need to do is for you to position, wait for price to come to that level which you have chosen to wait for price. And the levels are support and resistance, order block, demand zones, or people that trade even pullbacks, meaning that price will get to a resistance when it's coming back. As it's reversing, they will enter, and their target will be the next support level. It's not a magic. The professionals who have been trading for years that are making waves, ask them. It's a very simple thing. Until you realize this, you will continue to struggle. And that is why I beg you guys, don't struggle again. If your strategy is support and resistance, wait for the, okay, this is price got here, it came, it broke this level, all right? Now, if price come back to this place, where you need to be waiting for price now is here. Wait for price here. Wait for it here. Or you wait for it here. If you're the type that sits in front of your computer, you don't need to place a pending order. Wait. Once you see price coming down to this place and it gets here, you see a reaction. Maybe a rejection from here. After the rejection, wait for that rejection to close. You will see a bullish candle will appear that will engulf the previous candle. And once you see a bullish candle engulf the previous candle, wait for it to close again. Then once it open and gap up a little, enter. You target the next high. As simple as that. You don't need to struggle too much. So what am I trying to say? All these are strategies that you can learn even within 1 hour. Within an hour, you learn a strategy, but that is not the problem. The major problem is timing and how to get in. And that is why I'm making this video. All right. Now that price is going up, the other block that caused the break of structure, all right, you wait for it, for price to come to that level. And once price come, it will tap you in. Once it touches that level, it will dish out a buy. Now, what we don't know as a trader is that will that buy continue to push to the upside? If it is yes, target the next resistance level. That is where you should take your profit. All right? Or you take partial and allow the rest to run if it's a momentum that is very strong. Because price can get to that level, it will make a pullback, then continue pushing to the upside. But and at the end of the day, maybe if when it gets there, in the other hand, maybe when it gets there, it will reverse and start coming back. So it's very, very important for us to know, and it's very simple. All right, once we know all this, the next thing we should do first, we must identify. I've always in my video said this thing time without number. You must first of all identify the direction of trend. Direction of trend is very important. Direction of trend. All right, direction of trend. You must know this. Know where trend is going. All right, know where trend is headed. It's very important. You must be able to identify. And how do you identify that? You go to the higher time frame. Go to the higher time frame to know where the trend is headed. And one thing we must always do is to zoom out to see the chart correctly, neatly. You can see how I mark my support. This is a support. This is another support. All right. This is another support. You see how I mark. You mark maybe the recent 1, 2, 3. It's okay. You don't need to mark plenty. If it's coming down there, you will now be going down and mark it. Then look at what happened. Price broke structure here. It came up. When it got here, there's a resistance here. Price pulled down to this place. Okay, let's say price go to this place now, for example. All right, let's say price is here now. Price is here now. All right, it finds a little support here. It finds a support here. And you now watch it as it's going. All right, you see, it's coming down. It's still coming down. Then the next thing you see a bullish candle. It's going back. So it's making a pullback. Now, the normal sequence is for this movement now, it has engulfed this candle. It's supposed to break this place and continue going to the upside. All right? It's supposed to break. Okay, look at it. This place here is supposed to go up to break this place. Now, here is how it now works. By the time you now discover that this guy now that is supposed to be going up, look at it. Look at it. You see, there was a rejection here. Did he take out this high? No. He only got to this point and he stopped. What does that tell you? Double tops. It's telling you that something is about to happen. What will you do? You don't need to do anything. If you enter from here, take your once you see this rejection, you see this candle again, all right? What you need to do is wait a little. If you are on the trade already, all right, you wait. You see another rejection the second time, all right? Because what happens in the forex market, as far as traders are concerned, is greed and fear. We are too greedy. That is the problem. Now, if you have entered, you did not do anything wrong because this is a bullish engulfing candle that has engulfed this bearish candle. Why? Because there was a pullback. Now, this very one here is what we call um, a bullish engulfing candle. But with this bullish engulfing candle, what does that tell us? This is imbalance. There is imbalance here. There is imbalance here. All right? There is imbalance here. That means price will have to come to close up this imbalance. And what caused this break of structure is this other block here, this other block, this bearish candle here, this small bearish candle here, this one. All right? That is what caused the other block, the break of structure to the upside, this one here. All right? You mark it, you wait for price. As price come, it got to this place, it dish out buy. Now, watch what I just explained. It has already dished out a buy. All right? He has already dished out a buy and is going. But now he got to this place, you see a rejection. He tried to push again. You see another rejection. Now let's go forward. You see, he tried to push, he's rejecting. He tried to push. Now there is what? A bearish candle. A bearish candle. All you need to do is to take your profits and just once you have taken your profit, you now say, okay, this is double top. What will I do next? I don't need to do anything. Let me wait and see where the price is going. All right? What I will now want you to do is that you will now mark this place as what? A neckline. A neckline. Mark this place as a neckline. All right? You mark this place as a neckline. Now, you will now be saying, okay, once this price breaks this level and there's a pullback to retest this level, I will short the market. You change your bias. Look at it. Because of time, look at it. A bullish and a bearish engulfing candle. It has engulfed this previous one. Because of time, let's be fast about it. You see, it has already broken this neckline. What you should be doing right now is to change your bias. As far as I'm concerned, once I see something like this, what I will now do then is what? I will say what? Change of character. I'll mark this place as change of character. Let's play it. I will now be looking for a pullback that will give me an entry. You see, this is a pullback already. Once I see a bearish candle right now, once I see a bearish candle, you see a rejection, you see, it has already given me an entry here. So you join the market and target the low. Thank you so much.